The crypto markets are crashing. It is May the 1st. Bitcoin is currently trading at $57,300 right now. Altcoins are obviously down big, and it is time for a major market update. That is what this video is for. So, I'm not your typical fair weather friend. I'm not only here during the good times, I am here bull or bear market. It doesn't matter the conditions. So my style of updates with these charts, what I've been doing for many years, is it's not about what I would personally like the markets to do. Of course, I would like Bitcoin to go to $1 million tomorrow, but that is not realistic. So obviously everyone has their own biases, but what I do is I follow the charts. And if the charts are bullish, I share that and try and interpret the charts as being bullish and trade to the upside. If the charts look like they are bearish, I will share that and I will say, hey guys, the price action is bearish, and then it gives you other opportunities like being able to short it to the downside or being able to wait for better points of entry for reaccumulation. And that is again what I'm going to be doing here. This is not any sort of hopium or anything like that. I just share with you the charts, how I see them, how I interpret the price action, and a lot of the time that is actually pretty accurate. So if you enjoy this, please smash the like button, subscribe to my channel, to my Instagram page if you are not yet following, and whether you enjoyed this video, whether you feel good about the markets or not, leave a comment down below. Let me know your thoughts about the market and where you think things are heading. I do read all of them personally. So that being said, grab yourself your favorite beverage. This is going to be a long video. Let's dive in. Alright, so let's start out with the Bitcoin monthly returns since the monthly candle has just closed. And April closed red at negative 14.76%. This is in fact the worst performance for Bitcoin of April, the second worst one. The worst one was in 2022, marginally more at minus 17%. So this is definitely not the norm for April, but it is what it is, and we had this red month. Now we're into May. Now, as you know, there is a saying that goes, sell in May and stay away or go away. And in 2021, this was exactly perfectly the case. Now heading over to the charts here, this is the 3-day chart. And you can see over here in 2021, sell in May would have been a very good opportunity at this point in time if you had sold. It peaked around there, and then we ended up dropping about 50% from the April peak in the 3 months that followed, and then we went for a second peak. Okay, so far it seems very similar. If you've been following me for the last months or the last year or so, I've been talking about this for a long time, well ahead of time, looking for a potential front run, a potential peak in April, similarities to 2021 repeating, and so far we have something similar. Now, I will share with you my thoughts throughout this video, so don't be too quick to jump to conclusions. I want to go through all the various charts and the various points to make the argument and bring across how I'm seeing this and eventually how I get to my conclusion. Okay, so one step at a time. So, sell in May, go away. We have a bunch of things happening. First of all, in a couple hours from now, we have the Fed rate decision. So the interest rate decision that is expected to be unchanged. So if that probably has zero effect if it does indeed stay unchanged. If there is a surprise cut or hike, then it could affect the markets. But I will show you also later on in this video, the stock indices had red monthly candles. The dollar index looks like it goes higher. So what is really happening here? Now first, to alleviate any sort of panic or stress, again, we have to remove emotions from these markets. That is how it works. It doesn't matter, markets go up, markets go down. All that matters is, number one, you need to manage your risk. That's the most important thing. And number two, you need to have a plan. You need to know when you're buying and you need to know when you're selling. So the most important thing is, of course, managing risk. If the markets crash and go down, but you are well within your risk capital and you can handle it, well, then that's perfectly okay, and you have more capital to add to the position at optimal times. Most people get wrecked because they don't stick to risk management. They go all in. They put 50 or 60 or 70 or 80% of their net worth into the markets, also at the wrong timing, probably near the top. Then the market drops 50% or more and they get absolutely wrecked. Do not let that happen. Okay, if you are well within risk capital for crypto, that's usually within 10%. This market has been going up for more than a year, right? So you could have taken initial capital easily, right? Bitcoin went up 4x. You could have probably taken that initial and be sitting very comfortable. And what that means is if you put in $1,000 and the price increases and your capital increases to 2,000, you take out your initial 1,000. That way you have no risk to the markets. It's a free ride. Many altcoins went up 5x or even 10x or more, and you had this option if you got in early. And again, that's where it matters, knowing that you want to buy low and sell high. Okay, that is key. So with that out the way, this is still the most important chart overall to determine bear or bull bias. So this is the 3-day chart where every candle represents 3 days worth of price action. We have the 50 simple moving average in blue. And as you can see, it is very, very simple. When the price is above this 3-day 50 moving average, we are in bull markets, right? You can see that very clearly here in 2017, in 2020, and even here in 2024. Okay. Now, what you can also see, I've got all these green arrows here drawn at points where when the price was above it, it comes down to retest and it holds as support. So for some reason, this moving average on the Bitcoin 3-day chart works incredibly well in terms of bull bear support. And as long as the price is above it, it can touch it. It can even wick below it. My rule for reversal in trends is if we get 2 consecutive 3-day closes below this 50 moving average, then the trend reverses and I flip to bearish. As long as we're above there, retests of this moving average is perfectly fine. As you can see here in 2023, perfect retest, bounce. A little bit below it, but no 2 consecutive closes, bounce. This was a bit of a fake out, but once we reclaimed it, we went higher. So, as much as this dip seems scary, it is still completely within a healthy bull trend, and we have not yet lost the higher time frame bullish trend. As long as we are above this 3-day 50 moving average, which is currently about $54,000. So, perfectly okay. We went here, Bitcoin went from 16,000 to 74,000 without any sort of major correction. We are now, for the first time, seeing a semi-decent sized correction where we're down from 73 to 57, which in percentage terms isn't even that much. It's 23%. If you look at what happened in previous cycles, Bitcoin had multiple 40% corrections and still continued higher. So that is the good news here. In these markets, as much as it seems like everything is crashing and the whole world is burning and crypto is going to zero, that is not actually the case if you base it on the technical chart. And like I said, as long as we are above this 3-day 50 moving average, if it holds, it can wick below there, right? We can go to like 50. As long as we're not closing below this 54K for 2 consecutive closes in a row, that's perfectly fine. We can base around here, chop around here, and there is still potential for continuing higher. However, you can see here, when we lose the 3-day 50 moving average, it happened here. You can put this on a chart yourself on TradingView, check it out. Every time we lose this 3-day 50 moving average, it reverses the trend. And even though it's not right at the top, in fact, it's quite a percentage down already from the top, but usually once we lose that 3-day 50 moving average, then we are in for potentially another 50% haircut from that point. So even though it is not the quickest indicator, it is a pretty reliable one that helps you understand, hey, the bull market is over and we are potentially in for months of downside and bear market. And you can see this was the case here in 2022. When we lost this at the end of December 2021, basically that was the start of our bear market. And you can see it went from the point there at about 51,000 all the way down to 16,000. So even if you got out at around high 40,000s in early 2022, and you would have stayed out until we reclaimed it back here in January 2023, you would have basically sidestepped the entire bear market, being able to accumulate near the very lows and then ride it all the way back up again. So now we are at a point where we are approaching retesting that 3-day 50 moving average, and we are still technically in a bullish trend. Once we lose that 3-day 50 moving average, in my opinion, we increase the chance of a bearish reversal and potentially months of downside. We are not yet there. If we get there, I will make a video update on it and share my thoughts. So be sure to subscribe to my channel to get these updates. So look, in the short term, we simply have to understand what is happening here, and we have to take it level by level. You can see it swept the previous high, and this could potentially be considered a deviation where it went above the high, but it got back below it. And that is not the most bullish of signs. But again, we have this level now at the 3-day 50 moving average. So now we're at this point where we have to wait and see what the market is going to give us to be able to have a plan for both directions. So if we somehow bounce here and we continue higher, then we can potentially get back here. If we flip that, then we go to new all-time highs. But if we lose the 3-day 50 moving average, then potentially we can expect a bunch lower. So it's always about if, then, and right now we don't know what's going to happen. We are still bullish, so we could potentially expect this 3-day 50 moving average to hold. We have a plan for both sides. If we lose that 3-day 50 moving average, then we can expect multiple months of downside, and it's of course up to you. I'm not a financial advisor. You have to decide what to do with your own positions. But once we get a bearish reversal confirmation like this, then in my opinion, the whole trading strategy changes from buying dips to selling rallies. Okay, once we get into that bearish confirmation over here, like we did in 2022, you want to be selling every single bounce. You want to be shorting it on the way down to be able to profit from that, and then only once we reclaim it, then we do the opposite. Okay, so that is the strategy for if we lose it. And if we don't lose it and we bounce over here, then this will probably be the best area of interest, around about somewhere between 50 and 54. We might wick to 50,000, it's possible. Somewhere over there could potentially be a very good long entry. Either way, even if this holds, I would expect probably at least multiple weeks to create some sort of bottom formation over here in the same way that we did over here. You can see that took about 1.5 months over here to make a bottom. Even here, a couple weeks. Usually it takes some time after a drop like this. It's rare that it just instant V reverses and continues higher, especially in kind of current market conditions. So to sum this up, very simple. If the 3-day 50 moving average holds, expect a bounce somewhere around 54,000 and potentially continuation higher. If we lose the 3-day 50 moving average, then we can expect potential months of downside and bearish reversal, and then the strategy changes. So with that out the way, let me move on to the dollar index, and then let me show you the stock indices and share with you the bigger picture of the overall financial markets. So what we have here is the dollar index. It's currently at 106, and you can see I have these annotations on here. Let's change this to a weekly chart because I do like the 50-week moving average. Ideally, what we want to see is we want to see this get below the 50-week moving average, because that is when the previous risk asset bull markets happened. Okay, so the crypto boom happened when this was trending down in 2017 and 2020. Even here in 2023. Now it's moving higher, so that puts negative pressure on risk assets. So crypto, stock markets, euro, US dollar, for example, even gold. When the dollar index moves higher, those tend to move lower. It's an inverse correlation. I don't know why, it's just the way it is. Okay, so in terms of annotations here, what are we expecting? Well, there's a fair value gap here, an inefficiency. There's a Fibonacci golden pocket. And I was kind of expecting this already last year, but we didn't get that. And instead we chopped around. So right now it seems like the dollar is getting stronger, which means the dollar index here is going higher. Which means that if this continues, we can go somewhere between, I would say, like 107 to 110. And as long as this is continuing higher, then it's likely that the selling pressure on risk assets continues, meaning probably crypto lower and stuff like that for the next couple of weeks. But hopefully what we're going to get is what I've drawn here. If we get this move higher to somewhere between 107 and 110, after it hits that, everything reverses. Dollar index starts lower and risk assets start to pump higher. And of course, that would be great, because if this does indeed drop back to below 100, then we are probably looking at a big pump in overall markets. Now what I want to share with you is the S&P 500 as a benchmark just of the overall stock market in the US. We can look at a few different ones, but they all look similar. So this is a monthly chart here of the S&P 500, and you can see that closed in the red, and that is technically a bearish engulfing pattern. You can see this candlestick here, the red one is actually bigger than the green one the month before it. And what is also notable here is that when you put the RSI on monthly, you can see the price here went higher, it made a higher high, but it made a lower high on the RSI, and that is unfortunately a bearish signal. Now, this is a monthly chart and things could take longer to develop, but overall, when you see this kind of thing, it is not great, and we can expect downside at some points, maybe even in the shorter term. So we're going to have to wait and see. Sell in May, go away. That could very well end up being a case here. Ideally, we don't want to lose this 50 simple moving average. So 4,100 on the SPX, which is obviously quite a big drop. It's 20% from here. But as long as that holds, we are still technically here in this bull market that we've been here with this bullish trend since 2011. So for the last 13 years. As long as this moving average holds, it's perfectly okay, right? We could see a drop here, which would probably be pretty scary, but it's still possible it does that. If we lose this level, if we lose that 3-day 50 moving average and this low, if we get below there, then I think we're in for a repeat of 2008, a massive global financial crisis, bank failures, etc., and probably all risk assets around the world going a lot lower, which would be pretty nasty, recession, etc. Again, I'm just sharing with you the charts. This is obviously not what I would want to happen, but we call a spade a spade. If the charts are showing that it's going to go there, there's no point in being delusional and saying, hey, it's never going to happen, guys. We're going to go up only, and this is never going to happen. No, we simply acknowledge the potential of what could happen, and if this is going to happen again, be prepared for it. Have a plan, because it is actually not the end of the world. Even if the stock markets crash by 50% around the world, even if 2008 repeats, if you are prepared for it, you can become incredibly wealthy, right? You can get out of your positions higher up, here or wherever it's going to be, meaning you can cash out, be in cash, sidestep the whole dip. You can even short this on the way down if you know how to do this, either through put options or futures or whatever you use to trade, and it's possible to make enormous amounts of money in the bear market. Obviously, we'll be doing this inside my VIP Discord. At the moment, I'm not accepting new members, but maybe at some point later in the year, I will focus more on trading if we do get a bear market, because that's going to be the only way to make money in bear markets, is simply just to trade and short it on the way down. And it can be very, very profitable. That is why I'm able to just be here and be very calm about this and present this as a potential scenario, because for me, it doesn't matter. If it continues going higher, that's fine. We can buy spot, we can trade it on the way up too with futures with leverage. But if we get a multi-year bear market and it drops by 50% or more, stock market, crypto, it doesn't matter too, because we can simply trade that on the way down and also make money. That is the nice thing about understanding price action, about being able to trade and being able to short this, because then it doesn't matter, bull or bear market, we can make money either direction. That's the cool thing about it, and that is hopefully what I'm trying to convey here to you guys also with these updates ongoing that I make over and over and over again. It doesn't matter up or down. All you need to do is, number one, manage your risk always. Okay, make sure that you can't be ruined by a large move in either direction, meaning you're not overextended, you're not over leveraged, you're not using loans or anything like that to bet or speculate. Okay, that's the number one rule. Number two rule is to understand when to buy and when to sell based on price action, based on charts. There are times when things are completely overbought and overextended. That's when you want to sell, right? That's when you want to get out of your position and maybe even short it on the way down. And then naturally, as the market moves in cycles, it ebbs and flows. Once it's all the way down and people get pessimistic, that is when you want to start buying your spot, accumulate for the longer time. Or that is also when you want to start buying with leverage, potentially start taking trades with leverage if you do that kind of thing. And that is also the time then to start closing your positions that you rode down. And that's just over and over the same thing. Okay, you want to buy low, you want to sell high, over and over and over again. Okay, so now that we covered Bitcoin, the dollar index, stock markets, what does that mean for altcoins? And as you probably know, altcoins follow Bitcoin, which is why my focus is always on presenting the Bitcoin chart, because that is ultimately what matters. If Bitcoin consolidates or goes higher, altcoins tend to move higher too. If Bitcoin continues to drop, well, then altcoins are going to follow, and that liquidity is just going to go down. So that is why I always just share Bitcoin, and if you have that overall picture and you know what's happening with Bitcoin, then you can kind of guess what's going to happen to altcoins. Now, however, in this drop, like Bitcoin has dropped around 25% up to 25% from the highs, but a lot of these altcoins are down 50%, 60% or more. Some of these meme coins are down a lot already, and that's what we see. It's typical where the relationship between altcoins and Bitcoin is that they always outperform, both to the upside but also to the downside. So in bullish trends or bullish markets, you like to be positioned in altcoins because they usually do multiples in terms of upside gain compared to Bitcoin. But to the downside, when we go into bear markets, besides obviously being in cash and sidestepping the whole market down, is that usually altcoins end up dropping a lot more percentage-wise than Bitcoin. And that is why it is important to be aware of these relationships and to make the necessary shifts when markets change, because if you hold those altcoins all the way down, well, that can go down a lot more than Bitcoin, as you are probably seeing. So what we're looking at here is the crypto total market cap without Bitcoin. So it's basically the altcoin market cap. And what you can see over here, the main thing is here. We just took out this little wick over here, Fibonacci golden pocket, and so far it got rejected over here. This was the halving, and we're currently trending lower. How much lower? We don't know. We'll have to wait and see. But usually what you can do also is you can put a Fibonacci retracement on here, and you can see that this level potentially over here, this could be a level where the market cap could end up going to, which means there's still more downside. That's about 720 billion. That is roughly just over 20% lower still from the current market. And obviously individual altcoins could be more or less than that. But overall, in general, based on the charts, what I'm seeing is it's very possible that we do still see more downside here in May and probably June, July. That is probably the most likely outcome at this point. If I had to guess and say, you know, in the next couple months, what am I expecting? Well, I'm expecting probably a bit more correction in Bitcoin. Hopefully that's going to hold that 3-day 50 moving average, chop around the 50 or 55,000 level, and altcoins might continue to bleed further and still drop another 20, 30, 40, maybe 50%. Obviously depending on the specific coin. Just a general idea here, if I had to give you a guess what I think. And then as long as that all holds and plays out, a lot of people in these markets would be absolutely wrecked and destroyed. Hopefully not you, because you've been following this and you understand what's happening. And then that gives us a perfect opportunity to reaccumulate. It gives us basically a reset on the entire bull market, potentially. And if that happens, that is what we want to be looking for. We want to wait, be patient, wait for the markets to drop, reaccumulate, and then hopefully in the second half of the year, maybe Q3, Q4, remember we still have the US elections at the end of the year, a lot of stuff happening around the world, that potentially we might see another major push higher in risk assets later in the year. But to be able to participate in that, you have to understand the game. You have to, number one, survive, which is risk management. You have to be able to handle potential drop lower, 20, 30%, maybe more than that. You have to still have dry powder available to be able to enter the market at those opportune times. Think at the end of 2022, after the FTX collapse, that was the best time to get in. Again, if we are going to see more washout, more consolidation, most of the market participants, the FOMO, the euphoria is all gone. People are fearful, people are panicky. That's going to be, once again, the best time to buy. And that time might just be coming up. Usually Q2, also May, June, July, are these slow months in the markets. There could be some more fear in the markets. We could see the sell-off. So overall, personally, my strategy is simply here, wait for these kind of levels, see if the market structure holds, if the bullish market structure holds, and at the right time, whether that's in a couple of weeks from now or maybe in 2 or 3 months from now, if we do go significantly lower and look for bottom signs, to reaccumulate and then hopefully ride up the second part of this bull trend continuation. For now, short term, charts are looking bearish and I'm expecting downside in May. So as much as I would like the charts to go up, I present to you what I see in an unbiased way, whether that's bearish or bullish. In this case, I am sharing with you that the charts look bearish to me, and I will continue to update this, obviously, as the charts reveal themselves, a week at a time, 3 days at a time, and obviously in my VIP Discord, I do this on a daily basis, but we take it a level at a time. If charts look like they're going lower, we can trade it to the downside, we can wait, we can buy it lower, and then when charts are looking higher, I will share that again too. So I hope you found this video update informative. Leave a comment down below. What are your thoughts? You have questions? I do read them all personally. I will try and reply personally to every single comment. And I appreciate the support. Hang in there. There's lots of money to be made. It doesn't matter whether it goes up or down. Keep that in mind. Manage risk is your #1 priority. Make sure you survive and have the ability to survive any further potential drops. That is the most important. If you still have your capital, you can always make more money. Manage risk. Don't lose money. Rule #2, don't forget rule #1, which is don't lose money. So thanks for watching. I will see you in the next video.